Asia stocks were mixed on Monday due to some contradictory factors in the markets. Chinese factory activity in September came in above expectations. The Asian market PMI came in at 51.4 for September, above expectations of 50.2 and 50.4 in August. The official Chinese manufacturing PMI for September was also above expectations, but still showed a contraction at 49.8 in September. Shanghai Composite shed 0.92%. Over in Hong Kong, the Hang Seng Index rose 0.52%. In Japan, the Nikkei 225 slipped 0.56% to 21,755.84 amid a plunge in shares of index heavyweight SoftBank Group by 2.62%. South Korea's Kospi advanced 0.64%, while Australia's S&P ASX 200 shed 0.41% to end its trading day at 6,688.30. Overall, the MSCI Asia ex-Japan traded 0.06% lower. On the trade front, investors were spooked by the reports that the White House is considering curbs on U.S. investments in China, including the possibility of blocking all American investments in Chinese companies. China described the potential restrictions from Washington on investments in China as the latest attempt at a decoupling. European stocks on Monday ended the quarter with some gains as the Stoxx Europe 600 has climbed 2.2% for the quarter. The German DAX rose 0.38% to 12,428.08. The French CAC 40 gained 0.66% to 5,677.79, while the UK FTSE 100 declined 0.24% to 7,408.21 on Monday. Investor concerns over the U.S. restrictions have eased partially after Treasury spokesman Monica Crowley said that the administration had no plans to impose restrictions at this time, while White House Trade Advisor Peter Navarro claimed that the reports were fake news. As a reminder, high-level trade officials from the U.S. and China are expected to hold a fresh round of talks early next month. Meanwhile, British Prime Minister Boris Johnson said that he would not step down even if he fails to secure a deal to leave the European Union. He also insisted that only his ruling Conservative government can deliver Brexit on October 31st. On the data front, the Eurozone's jobless rate fell to its lowest level in more than 11 years in August, raising hopes that the region's economy can avoid a recession. The unemployment rate fell to 7.4% from 7.5% in July, hitting its lowest since May of 2008. Meanwhile, a final estimate of UK's second quarter GDP showed the British economy contracted by 0.2%. U.S. stocks also rose on Monday amid optimism around U.S.-China trade talks. The Dow Jones Industrial Average climbed 0.4%. The S&P 500 closed 0.5% higher, while the Nasdaq Composite gained 0.8%. The Dow and S&P 500 gained more than 1% each for the quarter, while the Nasdaq dipped 0.1%. It was the third straight quarterly gain for the Dow and S&P 500. For September, the Dow and S&P 500 were up 1.9% and 1.7% respectively. The Nasdaq gained 0.5% in September. Trump administration officials played down or disputed reports that Washington was weighing plans to impede U.S. investments in Chinese companies, soothing a fear that had put equities under pressure at the end of last week. On the data front, the Chicago PMI fell to 47.1 in September, down from 50.4, below the consensus range between 47.2 and 52. An index measuring the health of the Texas manufacturing sector came in at 13.9, down from 17.9 in August. In currencies, the greenback rose across the board, with the euro-US dollar dipping below the 1.09 handle for the first time since 2017. The pair registered long-term lows at 1.0884 and remains under the selling pressure early on Tuesday. The USD Japanese yen saw the fifth bullish day in a row, with the prices regaining the 108.00 figure and extended gains on Tuesday to the 108.30 area. As for commodities, Brent crude sank on Monday after reports that Saudi Aramco has fully restored production capacity that was lost to the attacks on Saudi oil facilities early in September. Additional selling pressure in the markets appeared to have resulted from a declaration by Saudi Arabia of a partial ceasefire in Yemen. As a result, Brent dipped below the $60 handle and registered fresh lows around $59.20. Also, China's economic outlook remained weak even as manufacturing data improved, with the continuing trade war with the U.S. weighing on demand growth for the world's largest crude importer. China warned of instability in international markets from any decoupling of China and the U.S. after sources said that Trump's administration was considering delisting Chinese companies from the U.S. stock exchanges. That is all for today. Thank you so much for watching, and please click subscribe to always be in touch with the latest market news.